going on, you knuckle dragging Neanderthals? Hope everyone's having a great Friday. We're going to do a video on APTOS today. This one's going to be a little more technical than usual. I'm going to give a intraday setup with a very clean target and a swing trade that we might be able to get into if the composite operator should bestow it upon us. All right, let's get into it. So first thing, when you look at this, you have a very obvious M-shaped structure with a range. So you have a range high, range low. The interesting detail here is at the range high, you have a ton of liquidities trapped up here. Not trapped, I mean, like, dude, it would take a ridiculous pump to get there. But there's equal highs at the top of the range. And at the low, you could see there's a weekly SFP of this level right here, completely rebalancing the zone and respecting this order block right here. So very clean range, kind of reminds me of Anchor Protocol, but we're going to go over the entire setup starting with the weekly and then dive into the 4-hour. So here's your weekly setup. A lot of you guys know I trade MMXM. One of the core tenets of MMXM is weekly internal to external and vice versa, weekly external into internal. In this case, this was your external low that got SFP'd over here. So the weekly external low objective was met. So the draw now is up here into this weekly internal. There's another one above it, but you don't want to look too far ahead. You don't want to get ahead of the market just yet. Just go for the obvious target here, the most likely target. So that's your weekly draw. And if you wanted to fib out from the swing high to low, it's around the 50% of the range. So within that dealing range, this is a reasonable target. So that's your weekly. We'll now jump into the daily. So on the daily, you have the original consolidation up here, which basically took out all these swing highs and then created this daily market maker model where you have one distribution here breaking below these lows, pretty strong displacement, another distribution zone, and a third one into the external low, which also rebalanced the weekly. So this is a pretty clean MMXM, and on the daily, the way we're going to treat it is the same as on the weekly profile. This was your daily external low right here. So once that gets nuked, you're going to be looking at the obvious daily internal range right there. Now you could say this candle right here, if you zoom in, you could see that that's a pretty imbalanced daily candle, but I would say that that's less significant than the one above, especially because you have equal highs at the top of the range. So right here, if you drop the time frame, you're going to have relatively equal highs, and you have all these failed swings on the way down. So the market maker left a bit of a footprint for this price action to go up into your daily target. So daily external into daily internal. That's your daily profile, and then we'll drop it into the intraday. And here's where things get interesting. So our most recent interaction on this, you could see there's a bit of a structure developed here at the highs, and there's a low that got taken out here, and then it reversed and shifted some intraday structure on the way up. So we'll pop open the H4, and you could see another market maker model developed on the intraday. So you have a raid of the low, buy program activated below it, so you had order pairing below this. Anyone who was long here with a stop below that low got tagged out, and anyone who was looking to get filled for the actual long would have had bids below that. So you had order pairing and then you had a pullback into this zone right here, which on lower time frame was actually an imbalance with internal range. So you could see there was an imbalance here, and then they took out the internal range lows into this order block. So that was your low risk buy within this 4-hour model. And then you could see the distribution zones pretty well developed. 2 taps of the high, 2 taps of the base. This one just kind of very trending market. Not as clean, but you could still see 2 taps here, 2 taps here. And then on the buy side of the curve, you could see a couple of accumulation zones. So accumulate, reaccumulate. And then if you focus on this fractal right here on the 4-hour time frame, when we map it based on time frame alignment, you're going from the 4-hour into the 15 minutes. So you're basically looking for 15-minute lows to get taken out and then a 15-minute shift in delivery. So if we look at this fractal right here, drop the time frame into 15 minutes, here's what happened in the range. So you had your 15-minute lows right here, you had an accumulation of stops above it right there, and then you had a raid of this low with a very strong displacement coming out of it into here and a shift above this high. So you have a 15-minute market structure shift, and then in this range right here, if you drop the time frame even one more time to the 5-minute, you can see there's a 5-minute up candle within this cluster of down that was used as a breaker right there, and it bounced. Now, I usually view if it's one stab into the breaker and it's a very shallow one like this, I view it as future liquidity. So this would have been a scalp if there was no displacement above that high, which we didn't have. If anything, it's been distributing over here. So this right here is going to become a internal range liquidity pool that will likely get nuked. And then you could see at the bottom of the breaker, there's a bit of an imbalance right here too. So the way I'm viewing this setup, if we zoom out a little just to better visualize it, on the 30-minute time frame, you have consolidation, you have your manipulation below this low, and then you have a strong displacement shifting structure. So any pullback into the area of interest, again, there's a 30-minute imbalance here too, so it's a very strong draw. So any pullback into the range, and this is your dealing range low, dealing range high, because they both took out liquidity on each side. So any pullback into the 618-786 fib, which is going to align nicely over here with the breaker and the 30-minute imbalance, that should get bought back. Also, it would be a reclaim of the manipulation low. So I always use on power of threes, that's your lower low, and that's your reclaim of this low. So on PO3s or accumulation manipulation distribution models, I always use the reclaim of the consolidation low as a potential area to go long, especially if you have an internal liquidity pool right here. So if we take this off, you'll see this is a very clean AMD model with the same swing fail structure like on the daily. So it looks like the algo likes to leave a footprint when it's going to do its next move and likes to manipulate before doing it. So that's the 15-minute, 30-minute setup, but what's important is to align it with the 4-hour structure. So if you look at the nature of this market maker model, the way these work is above the previous highs, so above these highs right here, and above these highs, you had a sell program activated there, and then you shifted below the low that formed the high. So then you enter into distribution 1, 2, until you purge the original low that started this buy side. So once the sell side is complete over here, your buy program's activated, low risk buy, accumulate, reaccumulation. This is where the silver bullet entry happens. So within market maker models, your silver bullet entry is going to be, it's a fancy way of calling it a continuation purge. On that second phase reaccumulation here, typically they will create some sort of internal range liquidity, which you could see on the 1 hour really clean. All this. and then they're going to nuke the stops before the actual move up. This ends up being the final phase of your market maker buy or sell model, depending on which side of the curve you're on. In this case, we're on the buy side, so you're basically longing it into the high that created the sell side of the curve. So in this case, you're trading that 15 and 30 minute AMD into the equal highs, which is basically this high and that high. And your intraday trade is going to be essentially I don't think I marked it in, but the point is your intraday trade is going to be a retest and reclaim of this level, or rebalance this zone and then into the high. So there's a pretty decent R value for this trade. I'd imagine it's going to be between 6 and 8 R just by looking at it. So let's say you get in below this low, your stop is going to go below this low, and you're going to be longing it into the equal highs. So this one's a little bit wider, so 4.65 R. The reason I like it especially for this one is if you look at the nature of the manipulation zone, the outside wick was taken before the move up, so I'm viewing this as your protected low now. In all likelihood, it won't violate that low. It might, but it's we're playing probabilities. There's no way to know if it will or it won't. We're just using probabilities to get it. So that's like a 5R trade there on intraday. So this will be your 4-hour setup, and then your final swing long entry that I'm seeing on the chart. If we zoom into the daily, again, this is going to be in a daily buy program. And what I like is all the time frames are aligning to up. So you basically have your daily, your weekly, your daily, your 4-hour, and down to your 15-minute time frame, you're basically pointing up, with these equal highs being your first draw. This liquidity arc is draw 2, and then the main daily draw is going to be up to there, with weekly substantially higher up there. So within this dealing range on the buy side, we're looking to get long on a swing in this range. The most obvious thing I see is essentially between this wick and that wick, you have a huge daily imbalance. Above it, you have a ton of liquidity stacked above there. So if you drop the time frame, you'll see between that wick, this one, and all these liquidity pools, you're going to have an inducement set up where in all likelihood their stops are going to be below that. So there's going to be potential liquidity for anyone trying to get filled within this dealing range just above these lows right here in that imbalance. So it's a pretty clean target if you ask me, and this is going to be the entry model. Now I'm not using the imbalance as the target for the entry, but if you measure out from this low to the dealing range high, this is your premium in the green, this is your discount, and you want to be longing in discount. So if we look closely, these down candles before big displacement up, eventually, shifting structure on lower time frames, this was your order block. Also, if you take a fixed range volume profile from the low to the high, and you zoom in a little bit here, you can see a spike in the volume at the top of the order block. And it's even cleaner on the 1 hour if you want to have a look at that. So you could see there's a huge spike right there. So I'm thinking that's going to be the main target. It's going to probably be around the 618. Oh, no, this is actually being a bit deeper. It's going to be in your OTE. So it's going to be closer to the 705 and 786 fib zone. So based on the daily, weekly, 4-hour, 15-minute profile, this trade looks really primed for a swing trade anywhere in this zone, basically between 503 to 528. So that's going to be the setup here. APTOS, very bullish on this coin just because it's one of the cleanest daily setups that I'm seeing right now in my chart scan. And I've went over dozens today. So I think this one's right at the top with CRV. And there's a couple other ones, but mainly this one and CRV are the standouts in my list. All right, that's APTOS.